This is Ingo Windsor at the Local Market Monitor. Today, I'll explain how our investors' metro analysis helps you evaluate a real estate investment, especially a rental property. We'll do this in two parts: an easy analysis version that focuses on three key elements, and then more details to sharpen your insight. If you're pressed for time, you can just stick around for the first part. Here are the three elements of the easy analysis. What does the economy tell us about the risk of investing in a particular market? In what rent range do you find the most renters in a particular zip code? And what type of investment is favored in a particular zip code? First, what can the economy in a market like Albuquerque tell us about the risk of investing there? The risk stems from the current and future demand for housing, which in turn depends on how well the local economy performs. We'll look later at the details of calculating this risk, but it's simply summarized in the risk rating on the first page of the metro analysis. The risk can be high, medium, or low. In this example, the risk is medium. The action advice here is this: if the risk rating for a market is high, you must drive a hard bargain on the price of any property you're considering. Investors sometimes accept a lower initial return on their investment because they expect rent and value increases in the future. When the risk rating is high, they should not do this because there's a good chance those increases won't happen. Now we'll go to the third page of the metro analysis for the other two elements, which apply to individual zip codes. The far left column in this table shows zip codes in the Albuquerque market. In the circle marked 2, we see the range of monthly rent where the highest concentration of renters is found in each zip code. Why is this range important? Because the average tenant moves out within 2 years. I repeat, the average rental tenant moves out within 2 years. So you will often need to find new tenants, and you need to know how easy or difficult it will be to find them. For example, look at zip code 87123 in the middle of the circle. The largest number of current renters in this zip code pay between $709 and $911 per month. This means that in this zip code, you will have the easiest time finding tenants for a property if your rent is in that range. You don't have to charge rents in that range, but you need to know where that range is, because above the range, you will find fewer renters, especially in a down economy, and below the range, more renters have financial problems. Both increase your risk. The action advice is this: you have the best chance to find tenants for your property if the rent is in the range of the highest renter concentration. If your rent is not in that range, you have higher risk and therefore need a higher return on your investment to make up for that risk. Now the circle marked 3, which shows the price-rent ratio. That's the average home price in a zip code divided by the average annual rent. For example, in zip code 87123, that ratio is 20. The ratio tells us the overlap of the owner and renter segments in a zip code, and therefore what kinds of investments are favored. In zip codes where home prices are much higher than rents, it's difficult to rent out a single-family home because not many renters can afford it. Investing in apartments or subdividing a single-family home into rental units is a better idea. The action advice is that if the price-rent ratio in a zip code is above 22, you're better off with apartments or subdividing. On the other side, if the ratio is below 16, homes are a bargain, and the easiest investment is a straight rental. Between 16 and 22, just about any type of investment is fine: straight rentals, upgrades, subdividing, or apartments. So here is a summary of our very practical action advice. 1, if the risk rating in a market is high, bargain hard to get the lowest price, and you may need to walk away from a property if the price is too high. 2, finding tenants is easiest in the range of rents where renters are most concentrated. 3, if the price-rent ratio is above 22, apartments and subdividing are favored. If the ratio is below 16, straight single-family rentals are favored. There are lots of other things you can learn from our investors' meta-analysis, but these three elements give you an enormous advantage in finding an investment that will produce solid long-term results. We'll look now at other features in the meta-analysis that give insight into local markets. But if you choose to leave us here, you've already got the main points. Okay, here are the features on the first page of the meta-analysis we'll examine in more detail. Next to the risk rating we've already talked about are two ratings for returns an investor can expect. One for cash-on-cash returns, that is from your rents, the other an equity return that would come from selling your property. These ratings are based on our forecasts of rents and home prices, and they can be high, medium, or low. The ratings are an indication, not a promise. Now the charts B, C, and D, which are the main ingredients in our risk ratings. Chart B shows the annual rate at which home prices have increased in the last few years. It indicates the current strength of demand for housing, including rentals. If demand has been weak, the risk of investing is higher. Chart C shows the annual rate at which jobs have increased in the last few years. It's an indicator of future demand for housing. If job growth is weak, the risk of investing is higher. Right now, the pandemic has overwhelmed this indicator, which is negative in almost all markets, but it does show how fast the local recovery is proceeding. Chart D shows the average home price and a comparison price in red called the income price, which is linked to local income. When home prices are well above the income price, a market is overpriced and the risk of investing is higher. In Albuquerque, demand for housing has been good. The market is not overpriced, but jobs have not yet recovered, so the overall risk rating is medium. Below these charts, the table at E shows the average home price and rent in this market, the home price to rent ratio, and our 3-year forecasts for home prices and rents. Now let's quickly see what charts B, C, and D look like in a couple of other markets. In Las Vegas, all three charts point to a high risk rating. Chart B shows a price bubble with demand now much lower than before. Chart C shows a large and persistent loss of jobs, and chart D shows the market is sharply overpriced. In Peoria, the risk is also high, but for different reasons. Chart B shows that demand for housing has been poor for years. Chart C shows that jobs were already being lost before the pandemic. And chart D shows that home prices have basically been flat for 15 years. The risk in Peoria is that demand will be weak not just until the pandemic is over, but well after that. Now let's look at our special COVID analysis, which shows how the pandemic is affecting markets differently. This is on page 2 of the Investors Meta-analysis. Chart F shows the percent of jobs in the 8 major job sectors and how they compare to the national average. In Albuquerque, there are fewer jobs in manufacturing and more in government. And even though the percent of jobs in healthcare and tourism are average, these sectors provide a lot of jobs in this market. On balance, this market is vulnerable to some permanent job losses. Chart G shows how well the individual sectors are recovering from the pandemic. As the national recovery proceeds, we'll get a better idea of long-term effects on local growth and therefore on the demand for housing. Finally, let's quickly go through the data in the zip code tables, skipping those elements we discussed above. First, you'll only see zip codes with a population of at least 5,000. Below that number, the government survey data are less reliable. Next, note the percent of people who are renters. Obviously, it's easier to find tenants in a zip code that already has lots of renters. The average rent is a monthly number. Home prices are in thousands of dollars. The 3 columns on the right show price changes from actual home sales. That's it. There's a lot of material here. Some is just good information that's hard to find, but most important is the unique analysis we provide to give investors the best possible chance to make a superior investment. If you have any questions about the investors metro analysis or specific markets, any questions at all, please contact us at info@localmarketmonitor.com. We really want to hear from you. Thanks very much for following along. I'm Ingo Windsor.